tomorrow. Anyways, let's jump into the markets. This morning we do have equities higher. Let's take a look at the chart of bonds real quick. Bonds are moving down, so money is definitely flowing into pretty much everything but bonds. Bonds are going down, and we're seeing money flow into the dollar. So people are, surprisingly, the dollar has got a very sharp rally today, and gold is up over 1% this morning. So gold just keeps floating higher. It doesn't matter what's going on. Gold just keeps on running and drifting higher day after day, week after week. And that's a very good thing, obviously, because we are long gold. And this is going to help drag up pretty much anything in the precious metal space, including miners. And really, it's in a helium balloon kind of phase. It's just a lot of money piling in, people accumulating it. No one wants to let it go. And so we're just going to let that continue to run. If we take a look at silver, it's relatively flat, but it did have a nice pop on Friday. So it's kind of had that move. And this morning, it's just kind of holding its ground up near some recent highs. It did poke to some above 88, above Friday's high. So we have those moving higher, or silver. If you look at gold miners, they are set to gap up sharply as well. So again, everything is just drifting higher other than pretty much the bond market. And that's kind of what we've been expecting to happen until there is a big reversal in the stock market. But right now, everything is in melt up phase and people are piling in. There's not a lot of fear in the market. Again, we look at the VIX. The VIX continues to kind of be relatively low, saying there's not a whole lot of fear in the market. And that is a sign that, a low volatility means the markets can keep drifting higher, and it'll climb that wall of worry. If people worried the market's going to roll over, it can do that for an extended period of time. And that's why we don't ever try to pick a top. That's why we get into these trends and we just let them unfold and run. That's why we're long equities, we're long gold. If we take a look at crude oil, it broke down last week. We'll just zoom in a bit here. If we look at crude oil, it broke down below these lows right through here last week. And today it's kind of coming back up for a little bit of a bounce, a kiss into that resistance area. Could kiss it goodbye and go lower. It might want to push up into the mid-range here where there's going to be a majority of volume traded through here. It may want to bounce up. But again, really clearly, the trend is still down, series of lower highs, lower lows. And if we go way back in time, it's very clear the trend that it is in at this point. If we take a look at the US dollar and the Canadian dollar, you can see this very big pivot point where either the currency exchange is below it or stuck above it or below it. And we are on the cusp of seeing the US dollar strengthen and take off and the Canadian dollar to lose more value, or the Canadian dollar lose value, which means this will go higher. So we're at this really critical turning point for the currency exchange as well. And this is typically what we're going to see if the stock market, the economy starts to kind of weaken. But we've got lots of price action, lots of movement. I think we're waiting for some kind of economic data and interest rates to come out that's going to affect the AI space. And another thing here, I'm kind of all over the board this morning, but Bitcoin up 1.36% this morning. It has poked to new all-time highs. We talked about how it's starting to muscle its way up here, and it's got this previous move. So it has now hit all-time highs. Again, the long-term chart, nothing has changed on here in terms of, I'm not a big fan of this price action here on the daily chart, but overall our long-term projection here is 135, 136 is the upside target. So we'll see how Bitcoin holds up at this level today. If sellers step in and pull it back, or if it breaks through and runs, or is it going to build a little bit of a bull flag and struggle here for a bit, which is a good thing, and then have the second half of the move up to that measured target that we have. So overall, the long-term trend of Bitcoin is still the 136,000 is that upside, and it's working its way up there. But overall, from my perspective, I prefer the gold trade, which is the one we've moved into. We've been in it for a little while. It's more stable. It's a more reliable trade. And so that is kind of that. We were looking at Bitcoin as a discretionary trade to get into. But right now, gold is the one that ended up getting our money and has been paying off very well with low volatility for the last several weeks. Now, typically near the end of a major stock market kind of top, and when the economy comes to shift, we tend to see commodities do well, which is why we've seen the Toronto Stock Exchange do well. We're seeing precious metals and miners. If we look at our hot list here, you'll notice pretty much everything up here, the top of the list is pretty commodity heavy. Silver, copper, clean tech, like energies. We've got lithium, gold miners, marijuana. We've got silver. We've got base metal miners, uranium. So we're definitely in this complex of anything in the precious metals commodity mining space has been performing exceptionally well. And pretty much really boring stuff at the bottom. Consumer staples, PBJ, which is the peanut butter and jam industry, or the food and beverage. We got wood, we got home builders, banking, real estate, all that stuff. The boring stuff is at the bottom, and all of the speculative stuff is at the top. So we're definitely in a feeding frenzy, as I talked about last week. Enjoy this ride. They are short-lived. These rallies tend to take off and happen very quickly, and then you do need to be ready to lock in gains, because eventually when things go straight up and go parabolic and they become a crowded trade for whoever's going to get involved in them, they usually come straight back down. And if we look at the monthly charts, this gives us an idea of the type of move that we've seen in the large cap gold stocks, where there's no doubt it has gone very parabolic to the upside. It's the same with silver miners. If we look at SILJ, again, straight up. If you look at any of these previous ones that go straight up, they generally don't end too well. And that's why we use technical analysis. We use position and risk management to protect those plays. This here is XME. This is the base metal miners, so just generic metal miners. There are some precious metal miners in there as well, but overall, again, it's right up. Everything is up at all-time highs and has gone parabolic, kind of a blow-off phase where it's kind of the euphoric phase. And we had members last week saying that every single mining stock they have in their portfolio is up over 100%. When money, it feels like it's free and it's easy and everything is working, it is exciting, it is great, but it's also when you need to start to take the blinders off and start looking around and realizing, hey, good times, will come to an end. And sometimes, I'm not saying we're going to have a huge crash like this by any means, but usually when things go parabolic, you give back half of that move, if not more. And usually when everybody is super bullish and has these crazy high forecasts for everything, that is usually also a warning sign. And that's what's been going on right now. So enjoy this ride to the upside. If you're loaded with miners and metals and all this stuff to the upside in the stock market, just remember it is about locking in gains. The markets will always have a pause. They'll eventually always have a pullback. You can always get back in. It's not like you're going to miss the rocket ship and it never comes back. They're pretty much, you can always get back in after some type of pause, even if it is at a higher price. After a pause, potentially for multiple months, even in the mining space, we just look at, we'll just pull up GDX, for example. A lot of people feel like they're missing out. They have to get in. That's what happens in these phases is severe FOMO, and everybody chases. But again, no matter what, even if it was to go higher, eventually it could put in a strong bull flag pattern for several months. This is the monthly chart. And then when it starts to turn up, it has got so much upside potential for the next leg, you can just get back in. So it's not about always trying to get the bottoms and selling at the top or holding on. It's about catching these moves, these big trends, and then protecting your capital, because you never know if one of these is going to turn into a streak of red bars and fizzle back out before taking another run. So I'm not trying to ruin the party here, but it is important to understand that everything is kind of feeding frenzy mode. It's like piranhas in the water when it comes to any stock that has to do with mining. I don't care if it's mining, iron or it's mining platinum or gold or silver. They're all shooting higher because everybody wants into the mining space. And that is just a sign to be aware. Anyways, that's it for now. We'll see how things unfold today and talk to you soon. Bye-bye.